Hi everyone, this is Brian Neal with TradeToBeFree.com, and I just want to review the trading setups we looked at this morning and how they performed. And like we said this morning, lumber liquidators looked really good and probably the best of the bunch that we were looking at this morning. If it got above 30.50 or 30.60, I think it was, we thought it could move up to, possibly, 32, 33 or higher. And sure enough, it did. It had a very strong earnings beat on the top line too, but the margins were what really improved this quarter. And so a lot of good news. I didn't see if they actually raised guidance or not, so I don't know if it qualifies as an earnings eruptions trade per se, but I saw it had a very big gap, a nice pre-market pattern into the open here. It kind of pulled back like we wanted to see, and it shortly after the open hit the entry point, we jumped in and took some off at about 3 to 5%, I think it was, using the instructions in the course, and we kept the rest. And we're going to stop it below the prior low on a 5-minute chart here. But the thing is, lumber liquidators, they actually filled a gap up to, I think it was 33. I also think we're heading into a little bit of a pullback overall market, the way it was looking and the way it looks really over the next, week or two. But this gap up here to around 33, and I think the low on that candle is 32.76. So I hit that point, and I thought, we're heading to 11 a.m., that 2-hour period. We're heading to that period from 11 a.m. to 1 a.m. where, trades generally don't do as well. These type of day trades, the ones that really move up a lot early in the morning. So I decided to take the rest of my position off here up around 32.63, I think it was. It may still trend higher. You could stop it below the prior low on this 5-minute chart here. And I didn't dig into the release. I probably should have as I was in the trade to see if I could hold it longer. There's not much time when the earnings releases in the morning like this. There's not much time to comb through everything. You have to just see what kind of pre-market pattern you have, what kind of gap, whether you beat it or not, other key facts in the earnings report, the long-term trend, and everything looked good except for, I didn't know if they raised guidance or not, so I don't know if it met that criteria or not. But it had the nice window, so to speak, to the next level of resistance. So I decided to go ahead and jump in at a break above, 30.50 or so. So yeah, so that worked out really well. That was a $2 and some cent move from the open, about 6-7%. Very, very easy, very simple, less stressful trading strategy. I think it may have pulled back, maybe 1 or 2% below the entry points. Let me see here. It looks like it pulled back, less than 1% from the ideal entry point. This is a very easy trading setup. Most trading setups that are promoted online involve penny stocks, and those are much more difficult. I'm not using a very advanced day trading platform here. This is more of a swing trading platform with a good order router where I don't have to worry about, getting a good fill or directing to a certain market center. I know it's a good proprietary order processor that they have. Whether you have $1,000 position size or $2,000 position size and you're using margin or not, or whether you've got $1 million position size, you can get into the stock at very nearly good entry point here, the technical entry point. And this trade has a very high probability of success. You don't have to be limited to 300,000 per year, 400,000 per year, or 200,000 per year, like you are with penny stocks. If you learn this strategy, you can do well with any account size. So if you have $200,000 positions you're putting on each trade, it's a lot easier to do it with this strategy and to make a lot of money, and it'll scale up to your account size. So as your account grows, you can still use the same strategy. So looks like we got out at the right time here because it's now pulling back after that gap fill. But so that was a great trade this morning. It was a real nice one. Another one we looked at was Cognex. Now Cognex technically satisfied all the criteria in the earnings eruption scores. So we definitely got into this one and made a pretty nice move from, let's see, about 3.5-4%. Very, very, very clean, very easy. It's not a lot of volatility, and I'd like to see more volume with these trades. The bid-ask spread was a little bit wider than I like to see. but not too bad. And hit the entry point, made a nice profit for us on that one too. So another good trade on that. And Shopify was the third one, and I didn't get a chance to see too if they raised guidance or not with Shopify. And interestingly enough, it's the third stock, the last stock to hit the entry point, our technical entry point that we use in the earnings eruption strategy. And what I've noticed is that the ones that break out the latest in the morning tend not to do as well. If you get to 10:30, 11 o'clock, and you have a really strong top growth stock, that can be different because you've got less volatility at that point in the day, and oftentimes it'll hit the entry point late in the morning, and make a real nice move without pulling back much, without pulling back below the entry point very much at all. But around the open, the first half hour of trading, if you got 3 or 4 trading steps you're looking at, usually the first one or two that hit the entry point will do the best. Okay, this one was a number 3, and I almost didn't enter it because, again, I didn't know if they raised guidance or not, and I know that they're not making money right now. So I didn't know. I thought, well, I've got 2 good trades that are doing really well, and why not? So I put a small position size in there, pulled back, and I think went down 2.5%. I cut my losses there, and just focused on maxing out on lumber liquidators and Cognex. So yeah, nice day in the market. I was a little concerned today with the SPY and the Qs pulling back around the open into 10:30 or so, because we've got these lower highs and lower lows on a 10-minute chart or shorter term chart that you look at over the past few days on the overall market. So I think we're heading into a bit of a pullback. So I'm not looking into keeping these trades for a longer period of time, although Cognex may continue to trend higher. Lumber liquidators I'm not as sure of, but again, it has that very strong rounding bottom pattern on a longer term chart, so it may continue to do well too. The other one I want to show you today was one that actually set up last week, and those that got the explosive bottoming pattern course could have seen this and have done really well on this. This was Noven, and back late last week, the stock hit the entry point and satisfied all the conditions in the explosive bottoming pattern course. The only thing it didn't satisfy really was the price range. And what we say in the course is that if you've got these stocks under $10 that form this pattern, that can be okay as long as you've got a larger bullish pattern. In this case, we've got this rounding bottom pattern, and also this long sort of flag pattern here too. So this stock hit the entry point last week out of this pattern, and it satisfied all the other conditions, I believe, in the course, and hit the entry point. It soared, I think, 60% within 2 or 3 days. So this is a daily chart here. Now it's pulled back. The entry point would have been around 420 or so, I think, and then the final exit point would have been 555. So following the course rules, you would have had $1.30 in 2 or 3 days, and that's about 30-40% profit in 2 or 3 days. So that was a great explosive bottoming pattern, and it's good to see now we're seeing more of the earnings eruptions trades come up that satisfy the conditions in the course. Sam Adams it mostly did on Friday, satisfy the conditions and made a real nice move out of that pattern. Cognex did today. Again, lumber liquidators and Shopify, I'm not sure if they satisfied all the conditions. I'll have to look more closely. But again, with lumber liquidators, you had a really strong, a nice break of a resistance and a nice ceiling to your next level of resistance, and that attracted me to that trade, and I knew it had a good chance of making a big move higher. So, and it looks like it's pulling back now after we got out. So, great day. If you want to check out that course, again, these strategies can be used with all account sizes. They're very effective. They have a higher probability of success. They're played with a very tight stop loss. The earnings eruptions trade is played with a 2.5% stop loss, and the explosive bottoming pattern is played with a 3.5% stop loss, and they have a very high probability of success of going at least 3-4% higher without hitting the stop loss, and they often make big moves, as we've seen with Noven. Now, We also had one in June, RH, Restoration Hardware, which also, we didn't have this in our newsletter, but if those with the course, they can do the research and find these if they want to play these shorter term patterns. So we also found this stock using the course, the video trading course, to find this setup here, Restoration Hardware, and it had a really nice entry point. And like with a lot of these trades, it got off to a nice start. It didn't pull back much after the entry point. Usually the biggest winners will hit the entry point and take off and not look back. So, and when I say take off, I mean over a number of days. But even during the day, when it hits the entry point, it often, on the best winners, on the best trades, will move higher, pull back a little bit, but not go much below the entry point at all. So it's a very low stress, very easy trading strategy to use. And this is a great example of one that hit all the criteria in the course. Now, not all these will make this kind of move, but Restoration Hardware hit the entry point after developing the pattern. And I think this moved, let's see, I think that's $34 in a month. So in a month it moved, so in around 1 month it moved, I think that's 80%, around 80% or so within about a month out of that pattern. And it's not a penny stock, it's not a risky stock under 5. Noven, NLVN, that stock that moved so much over the past few days, that stock had a very wide bid-ask spread, but this stock didn't have that problem. So it made a huge move, and you could have, played a $1 million position on this. You could have put $1,000 into this, $2,000 into this. It's not going to matter, what your account size is. You can still play this pattern in this price range and do extremely well. Okay, so not only does it scale well, but you'll find yourself making, on average, more per trade. If you add up the winning trades, the losing trades, the slippage, and the wide bid-ask spreads on penny stocks, and the times that they are halted and open up lower, and everything included, when they gap lower, but with everything included, you'll actually average more per trade using these strategies than you will with penny stocks for most traders. Not only that, but you'll have fewer trades, so you're not going after 1, 2, 3% per trade and being happy with that. You're looking at 3% to 5% is pretty standard, with the average trading profits larger than that. And a lot of these make huge moves, like here with Restoration Hardware, and these higher price ranges. And the other advantage too that you have with these strategies is that you can work full time and use this. Okay, so in the course we teach you how to put a buy stop order in the market for the explosive bottoming pattern. Okay, that order executes automatically for you, while you're at work, and then you just manage the trade per the instructions in the course, and it's very straightforward, and you don't have to, give up a day job and an income in order to use a strategy. And it's actually more effective than most other strategies. I think pretty much all other strategies I've tried, including day trading penny stocks, this is much more effective, much more profitable, and it requires fewer trades. You don't have to do 15 trades to make 5%, 10%. You can do 2 or 3 trades and do that. Okay, so it's got a lot of advantages. Again, if you work full time and you want to play the earnings eruptions trade, that also can be done with the full-time job and using buy stop orders and the instructions in the course, and has a very high likelihood of success. And actually the profits come a little quicker in most cases than with the explosive bottoming pattern. So the great strategies, guys, check out the site, learn them, and we have some of the first videos in those 2 strategies available on the site. You can go to the blog and find those. And best luck in your trading, and we'll talk to you again real soon. Thanks for watching today. If you liked the video, give it a thumbs up below. And be sure to tap my image here to get notified when our next video is published. And if you haven't yet, tap here to get our top 2 trading opportunities for the coming week emailed to you. Stocks with the right technicals and fundamentals to make a big move higher. And if you want to learn one of my best strategies, tap here and you can learn how to do it yourself.